The UK stock market is on edge, rocked by a chain of events that began across the pond. But are these jitters justified, or is it a case of contagion from US financial woes? A tale of two banks and a market in turmoil. Just 5 minutes ago, a bombshell hit the financial world. Ben King, our business reporter, brings us the scoop. U.S. banks are in the spotlight after two regional lenders, Western Alliance Bank and Zions Bank, revealed issues with bad or potentially fraudulent loans. This news sent shockwaves through global markets, with the UK bearing the brunt. The impact was immediate and severe. Barclays and Standard Chartered, UK banking giants, witnessed their share prices plummeting over 5%. The FTSE 100, a barometer of the country's top companies, wasn't spared either, dipping 1.5% before a slight recovery. And it wasn't just a UK affair. Markets worldwide, from Germany's DAX to France's CAC 40, mirrored the downward trend. But here's where it gets controversial. Zions Bank announced a $50 million write-off on two loans, while Western Alliance initiated legal action alleging fraud. This has investors scratching their heads, wondering if these are isolated incidents or signs of deeper systemic issues. Russ Mould, investment director at AJ Bell, weighs in. Regional banks in the U.S. have raised red flags, prompting investors to question the risk management and lending practices across the sector. He adds, it's a knee-jerk reaction, but investors are right to be cautious. The ripple effect spread to Europe, with Deutsche Bank and Societe Generale experiencing similar share price drops. Even Asian markets weren't immune, with Japan's Nikkei and Hong Kong's Hang Seng Index taking a hit. However, a twist in the tale. The affected U.S. banks seem to be bouncing back. On Friday morning, Zions Bank and Western Alliance Bancorp shares rose by approximately 2%, a stark contrast to their previous day's losses. The White House's take? A spokesperson, Kevin Hassett, downplayed concerns, stating that U.S. banks have ample reserves to weather the storm. But is this confidence warranted, given the recent failures of prominent U.S. firms like Tricolor and First Brands? Jamie Dimon, J.P. Morgan Chase's CEO, hints at a broader issue, suggesting these failures may be indicative of problems in the private credit market. He warns, when you see one cockroach, leaving investors wondering if more trouble lies ahead. Adding fuel to the fire, there's talk of an AI investment bubble in the U.S. stock market. Could this be a factor in the market's volatility? As investors seek stability, gold prices soar to unprecedented levels, and the VIX Volatility Index spikes, reflecting heightened anxiety. So, is this a temporary blip or a sign of deeper troubles in the financial world? The comments section is open for your thoughts and insights.